Hello everyone, welcome back to my YouTube channel Legal World. Myself Dr. Seema Goyal. As today I am going to start with a new series on the Banking Law and the Negotiable Instrument Act. In this series, I will discuss certain important questions relating to the banking law, which are important for the examination point of view for all the LLB as well as BA LLB students who are having BA banking law as a subject. I will discuss with the first question, that is relating to the banking law, Unit 1. My question is, define the term banking as well as salient features of the banking. If we talk about the introduction to bank, history of the banking is very old and the modern commercial world can't survive without the banking business. And money is the driving force behind all the enterprises. It is the foundation head of trade and commerce. When we don't have any immediate use for our money, but we don't want to lose it, either we have got to save it. Banks have always seen as intermediaries, which pull individual savings and channelize the same for the productive commercial purposes. Thus, the banks not only dealt in money, but they also have to create money. If we talk about the bank, that plays a significant role in every society, and banks are the oldest financial intermediaries in the financial system, which are playing dimensional, multidirectional, as well as multifaceted role for the overall development of a nation's economy. Thus, the banks not only help in achieving the healthy economy, which is not possible without having an effective banking system, they also help in the development of nation to attain the advanced development in every aspect. Thus, the banks are called as the heart of modern economy. Not only dealt with the money and credit, but they are leading all round growth and development of a nation. We talk about the meaning of bank. The term bank has been derived from the French term, that is bankus or banque, which means bench. If we talk about the early period, more period, persons dealing with the money as a bank money changer or the money lender, they were using bench or desk for their transactions. Thus the term bank was used for those transactions in which money was changed by one person to other. A bank is an institution which dealt with money and credit. It accepts deposits from the public for the purpose of lending or investment and makes the fund available to those who need them and help in the remittance of money from one place to the another and repayable on demand or otherwise and withdrawal by check, draft, order or otherwise. In fact, a modern bank performs a variety of functions. So it is not possible to give a precise definition of the term bank. Historically, a bank merely served as a place for the safekeeping of the depositors' money. And even now, that is the primary function of the bank. The term bank has been defined under the various statutes, legislations, regulations, treaties, textbooks, and by various jurists. First definition that is given by Halsbury Law of England. According to Halsbury Law of England, a banker is an individual, partnership, or corporation whose sole, or predominating business is banking. That is the receipt of money on current or deposit account, and the payment of check drawn by, and the collection of checks paid in by his customer. Second definition that is given by European Union. As per European Union, bank is an undertaking, the business of which is to receive the deposits or otherwise repayable funds from the public and to grant credits for its own account. According to Sir John Paget, no one and nobody corporate or otherwise can be banker who does not take the deposit accounts, take the current accounts, issue and pay checks drawn on himself or the collect checks crossed and uncrossed for its customers. And the next definition that is given by Professor Sheldon in his book Practice and Law. According to Professor Sheldon, banker is a person who can't claim to be carrying on the business of banking unless he receives money or instruments representing money on current accounts or owner's checks drawn thereon and collects the proceeds of checks which his customers place into his hands for the collection. According to Justice Smith, principal part of the business of banker is receiving money on deposits, along the same to be drawn against as and when the depositor desires, and paying interest on the amount standing on deposits. And the next definition that is given by John L. Douglas. According to Professor John L. Douglas, bank is a legal entity that receives funds from the public that are able to be withdrawn at per either on demand or at a stated time and displace those funds in the form of loan or otherwise or other permissible investments. According to Professor Kinley, the bank is an establishment which makes to individuals such advances of money as may be required and safely made, and to which individuals entrust money when not required by them for use. According to Professor Walter Leaf, a bank is a person or corporation which holds itself and to receive from the public deposits payable on demand by check. And the next definition that is given by Professor Herbert L. Hart. According to Professor Hart, a banker is one who in the ordinary course of his business owns checks drawn upon him by persons from and for whom he receives money on current accounts. And the next definition that is given by C. Crowther. C. Crowther defines the bank as a bank collects money from those who have it to spare and who are saving it out of their income and lends this money out of those who requires it. And the next definition that is given by Section 2 of the Bill of Exchange Act 1882 of the United Kingdom. According to Bill of Exchange Act, banker includes a body of persons, whether incorporated or not, who carry on the business of banking. As per Section 3 of the Negotiable Instrument Act 1881, banker includes any person acting as a banker and any post office saving bank. That is the definition given by Negotiable Instrument Act under Section 3. If we talk about the salient features of the banker, from the above definition that I have discussed, there are the certain salient features of the banker. These are: number one, receiving of money on deposits from the public on current saving or fixed account. Second feature is such money is repayable on demand or otherwise. And the third feature is such deposits must be withdrawable by checks, drafts or orders, etc. And the next feature, that is any money accepted as deposits must be for the purpose of lending or investment and performance of banking business as the main business. Hence, we can say that a bank is a financial institution which accepts deposits and loans, lends the money and also provides various utility services. So it tries to bridge the gap between the savers and the borrowers. If you have any doubt, then you must put down in the comment section, and don't forget to like, share and subscribe this channel for the further update. Thank you.